My name is Adrian Aita, and I will present you a structural view of the price dynamics I designed. I call this Asymmetric Response Envelopes, ARES. I'm not a financial advisor. ARES is a structural tool, not a financial advice. ARES creates a dynamic structure that shapes how price evolves over time. It shows where the market is stretched or relaxed, and it does not make use of moving averages. If there is no structure, just the raw data, some kind of randomness appears in the price evolution. However, with the ARES structure, it reveals sort of elastic behavior similar to those of physical systems. This kind of structure is revealed in any time frame, so it's fractal. You could plot the envelopes in any time frame. We had this is a 1 minute chart. The previously was weekly chart. The core idea relates to the fact that the market reacts asymmetrically to expansion and contraction, to moves up versus down, and ARES includes this market asymmetry in its design. ARES builds an upper envelope which tracks the highs and a lower envelope which tracks the lows, and there is a midline which represents the balance implied by the envelopes, the dotted line here. In addition, there is a mid-smooth line which is like the rest position of a spring. The price oscillates around it, and when forces come down, it returns there. This mid-smooth line together with the midline, they define the mid-cloud, which has particular importance in characterizing the price development. If the cloud is thin, then there is a stable trend, while if the cloud thickens, it signals compression and instability. While a flipping cloud, it shows a regime transition, usually accumulation distribution zones. From the point of view of ARES, a reversal represents a price breaking across the midline and expanding in the opposite direction, like would be bullish here or bearish on the other side. Reading ARES is simple. The shape is given by the envelopes or the cloud in between the envelopes. That helps you better see the trend and the regime of the market. As the structure is fractal, the alignment across time frames increasing the reliability of different other signals you might have. For any time frame, you could plot the current time frame envelopes and midlines, and also the high time frame envelopes. Here's an example of real multi-time frame analysis. We have the 4 hours, the daily, the weekly, and the monthly charts. The QQQ reverses here when the price actually bounces on the lower envelope from the high time frame on the weekly. In addition, looking at the monthly chart, we see that the bounce actually happened while the price was hitting the midline of the current time frame. The real power for ARES comes in conjunction with momentum indicators. We see that the price writes the upper envelopes for the current time frame, also the higher time frame, but we cannot really tell what the further evolution of the price would be. However, in conjunction with MACD or other momentum indicators like RSI, or I have here 2 other indicators of mine, the ADT, which is free on the TrendSpider, also with the coloring that you have here for the candles as well, and market wave structure. They're all these indicators we have here, they're in the negative divergent relative to the price evolution and supporting a lower development of the price, which actually happens later on. On the contrary, when the price hits here the upper envelope, we see that the all the indicators are in a bullish setup and also a positive divergence relative to the price evolution. Combining ARES with momentum indicators, it can be very productive, like we've seen. And here's another example for SPY reversal in 2025. We see that the price moves above the midline and continues that expansion in the opposite direction. This movement is paralleled by a positive divergence in the MACD, market wave structure, and the ADT. Moreover, and more interesting, looking at the weekly, we see that the price actually has bounced on the lower envelope from the high time frame for this weekly chart. Given here the current position of the price, it is apparent that potentially more downward developments may happen. However, looking at the indicators, we see that all these momentum indicators, they're heavily overstretched and at levels where previously reversals have happened in the market. But again, looking at the weekly chart, we see that the price just hit the midline of the high time frame for this weekly chart. And that's also supported by the fact that we have, from the MACD histogram, we have a little bit of positive divergence here, and also the level of the market wave structure is at the level where previous reversals have happened, and the ADT as well. And indeed, a very strong move upwards has happened after that, demonstrating that the ARES analysis in conjunction with the momentum indicators may pinpoint to capitulation zones. Similar examples can be found, for instance, for the 2020 crash, the COVID crash, or 2007, or 2001, or 1987. ARES provides a framework in which you could see the price development, and you could relate that to other indicators you might be using. It provides direction, structure, regime, context, and in conjunction with momentum indicators may lead to significantly better decisions for the market movements. Thank you.